Hello and welcome to Trading Hour. I'm Reema Tendulkar. With me today is Vivek Iyer, and it's the November monthly expiry. Markets are turning volatile. The Nifty's dipped nearly 250 points from the day's high. The high today was 24,350. Now as we speak, 150 points off from yesterday's close, but from the day's high, it's 250 points lower. Things are looking weak. Sensex is bleeding nearly 600 points. The mid-cap index is in the green so far, but that too has come off significantly from the day's high. The sectors under pressure include IT. So IT is taking the biggest brunt of selling pressure after the recent rally. IT is selling off rapidly, 2% gone on that. Auto is weak, healthcare is down. Pharma, that's the pharma index is down nearly 2/3 of a percentage point. On the way up, not too many PSU banks are managing to have a green tick again, but these are off significantly from the day's high. Just the picture in the market has turned in the last 30 minutes.
Last 30 minutes, we've seen significant selling pressure. And like you rightly mentioned today, is the expiry as far as the November series is concerned. So we are going into the December series on a very, very volatile note. So, the first thing that we should have a look at is the India wick, and that seems to have spiked up a little bit, at least in the last half hour of the trading session. Like you mentioned, all of the key indices, Nifty Bank, mid-cap, small-cap indices holding, but still they're significantly off the day's high. Individual stocks that we can have a look at, look at Amba Enterprises. That particular stock been a big mover, but today seen significant selling pressure. A Goldman Sachs downgrade coming in over there. Amba Enterprises down almost 3.5%. And two stocks, from the broader end of the market, the FMCG packs relatively resilient today. But when you're talking about two stocks from the broader end of the markets, have a look at Aditya Vision and EMIL, a Nuvama initiating note, and those two stocks are doing quite well in the session. But again, like you mentioned, the entire texture of the market has seen significant selling and has taken a turn for the worse just in the last half hour.
Indeed. Some say it's possibility geopolitical concerns which have risen to the fore, but it could also just be volatility given that it's the monthly expiry. Anirudh Garg from Inva Asset PMS is now joining in to discuss the market fundamentals. Anirudh, first weigh in on this sudden turn in the market sentiment. Things were looking fine in the morning and now we're down 150 points. What would you attribute this last 30-minute fall to? Have you picked up anything?
Thank you, Reema. Thank you for inviting me. So I think it's just a usual market correction that goes on from time to time. Today's expiry and, a lot of interest in the, the option side of the market. So I don't think there is a big problem in the market. On the other hand, I feel that with the Adani news, market has formed a formidable base. We at Invasset believe that you need to be very, very aware of good news and bad news happening in the market, and particularly the big ones. We believe that the Adani news was a very, very big negative in terms of sentiment rather than the fundamental, and it has served as a base for the market to bounce back from here. Though we still believe that we are in a bull market correction, but we believe that there will be a significant retracement from here. And but we are a little bit cautious on the mid cap and small cap side of the market, because for us, historically, this segment is very, very expensive. And I would like, if given a chance that our targets in Nifty are achieved, we would like to add more cash to our portfolio going forward.
So Anirudh, you said there is a possibility we formed a formidable base given the Adani news flow. But on the other hand, you're also saying that expect some retracement in the market. So what exactly is the call now for the next 3 to 6 months? Do the markets head lower from here on? Because you already have 1/3 of your holdings in cash.
Yes. So what we believe is that we'll like to add, take the cash holdings to at least 50%, because we fundamentally believe that we are in a bull market correction and there will be better opportunities going forward to add to our portfolio. So we want to keep a little bit cash for that as well. And by what I'm trying to say is that we are in a bull market correction historically. By saying that, I do not mean that the market cannot touch their new highs. They surely can. But generally, with the level of valuations and the growth concerns that the Indian markets are having, we believe that this is an ongoing bull market correction where instead of going to the new high, market may just retrace. Generally, the retracement is around 50%, which is at 24,700, 800 levels. So yes, we believe that the market would still remain under pressure. But yes, the Adani news has surely formed a base, and all those sectors which were beaten down will have a good retracement from here, like defense, or railways, infrastructure, power, or other PSUs.
Anirudh, 1/3 of your holding is cash, like you just mentioned. You want to raise it up to 50%. So are you, ruling out a recovery as far as earnings are concerned, at least in the second half? Do you think earnings could be further delayed?
Yes, I do believe so. And also, along with that, the levels at which the market is operating, the valuations are not providing us a lot of comfort. The leverage bets in the market, the extraordinary interest of the investors that we have seen in the last say 6 months, not even 1 year, last 6 months is something I believe that is extraordinary. I've not seen it in 17 years of my career. A lot of bets which are placed without looking at the fundamentals, just looking at the momentum, I believe will be corrected. And this is the usual course of business in the markets, nothing usual. Whenever there is a bull market, you tend to forget that bull market corrections are also a part of the market. And something of that sort is going on in the market. Except 2018, I've never seen markets moving up in such valuations. So yes, these are markets, and there can always be chances that we may be wrong, but we move according to probability. And with such high valuations and low growth, we still believe that the Indian markets need to take a breather for some time.
So, Anirudh, tell us how you are constructing your portfolio now, because clearly you're cautious. So, the stocks that you hold can ride the storm over the next few months. So, tell us about your portfolio construct.
So, see, there is one sector, Rima, that I would like to share with the investors. Something how this idea generated back in 2013. In 2008, when there was a global financial meltdown, the FMCG sector in India, particularly the FMCG companies like HUL, ITC, those who were owned by top managements, when the market corrected from 6,500 levels, I'm talking about the Nifty, 6,500 levels from January 2008 to 2,250 levels in October 2008, around a 66% correction in the overall market we saw at that time. These companies went down only 20%. And that is how this research started. And what we noted was that whenever there is a chance of bull market correction or a bear market, money moves from value and growth towards safety. So FMCG is one of those pockets where money moves a lot. So we would say 1/3 of our portfolio we have placed in FMCG, another 1/3 of our portfolio we have placed in index stocks. We are now more, we are taking index stock as an umbrella to safeguard our investors from broader declines that can be there. We believe that the mid and small caps may have another 20% decline, while the big stocks or index stocks like the Nifty stocks may have just a 5 to 7% correction. So that is why we are taking these steps, particularly in index and FMCG.
Anirudh, we understood that. So FMCG is something you like. You also feel there's safety as far as some of the index names are concerned. 50% portfolio will eventually head to cash. So in this particular decline, or H2, when you see more declines as you are predicting, where is it that you will incrementally go ahead and hold up? Or which are the sectors that you like?
So see, this is an old economy run, and I believe again the old economy, when the valuations are corrected, will take over. So again, these stocks which are related to power or green energy or capital expenditure would again see the focus. We've been invested into stocks like railways, defense, infrastructure, power for the last 2 years, back from November of 2022, and exited the position a couple of months ago. So yes, again, as the valuations correct, as the things settle, as again the government capex starts to pitch in, again these stocks would be the favorites. And I believe this is again where the positions would come in, because ultimately the stronger growth is here. We are also bullish on, I would say, especially the platform companies, something like a BSE or a Zomato. But again, the valuations are on a higher side. And yeah, as the markets correct and we get a better opportunity, we'll sure enter these companies again.
Thank you so much, Anirudh, for joining us and giving us your sense on markets, cautious stance that you have over there. But moving on, let's slip into a short break. Up next, we'll discuss what's buzzing in the commodity space with Manisha Gupta. Welcome back to Trading Hour. Well, shifting our focus now to the commodity space, Manisha joins in, and today we are focusing on silver.
Oh, well, yes, if you didn't buy it when it was ₹1,00,000 a kg, you could buy it. Now it's at 87,000 rupees a kg. Well, yes, that's the kind of decline that we've seen come in for silver prices. The high for this year has been $34 an ounce. And from there, we've broken the psychological important level of $30 an ounce. And today as well seems to be another day when we are looking at another percentage point going down into the markets. So with this decline, we are trading at a 2-month lows. We also have seen prices decline by 13% on a month-on-month basis. But for the year, we still are in the positive by 20%. There was a time when silver was up 47% in this year. Clearly, those kind of gains seem to be easing off. Silver has slipped on fear of tariffs that US seems to be putting up on China. Remember, China is the largest consumer of silver at this point in time. When it comes to industrial demand, it is clearly leading it with solar panels, photovoltaic. And if those tariffs could do any damage, that's exactly what we are seeing in sense of impact there. The second thing is about the month of December and the US Fed, whether it would cut interest rates or not. The probability of that is now just about 60% that's weighing on. The strength in US dollar also has been yet another reason. And then the Indian prices also have seen a very sharp decline. The markets do believe that, though, that the price decline could work in favor in sense of demand going forward, especially with Indians right now into a very strong, thick feeding season. You could be looking at those numbers adding up on the higher side.
Thank you very much for that, Manisha. Silver price is down, but still up 20% for the year so far. Get into a break. We'll come back and discuss market technicals. Nagraj Shetty from HDFC Security joins in with his top trading bets.
Welcome back to Trading Hour. Well, a couple of stocks that are holding out in the green despite the kind of selling pressure that you're seeing in the market. Two stocks are from the PSU space. The first one is NBCC and the second one is HUDCO. This on the back of a news development that both of the companies announced post-market hours yesterday. NBCC and HUDCO have signed an MOU, and this is for the development of a 10-acre institutional plot in Noida. HUDCO, intends to create an institutional complex, spanning both commercial as well as some residential area as well. And the project is expected to have close to 8.71 lakh square feet of built-up area. What will be the total project cost? Close to 600 crores, and NBCC will be the project management consultant, and they will undertake the execution of the complete project, with the scope being both from concept till the end commissioning. So overall, a positive development for both NBCC and HUDCO, and holding out in some green, despite the kind of selling we've seen.
But now that midcap index itself is also rapidly giving up its green, so close to flattening out now for the midcap index. But KEC International is also a stock that you look at, and it's won 1,700 crore worth of orders.
Well, that's right. Recall yesterday, the management was on a channel, and
yes,
the first thing that he said was that they hadn't seen this kind of ordering and tendering activity for a very, very long time.
But is it because it was pent up and then the election season was a lull, or has it been through the year?
Well, the company at the end of Q2 had said that, there were a lot of bids that had taken place, in the last 2 quarters, and the bids were, they were waiting to be opened. So a lot of opening up of bids have happened, and the company was the L1 in quite a few bids. So in the last 3 to 4 announcements that the company has done, there have been quite a lot of order wins that the company has received. So this particular order that we're talking about is a turnkey order of over 1,700 crores. This is from Power Grid. Order has been received in the T&D business, that is the transmission and distribution business. KEC will be designing, supplying and installing 765 kilo voltage transmission lines as well as GIS substations. Order book, remember, for the company stood at a very healthy 34,000 crore at the end of Q2. Company expects very strong order inflow for FY25, and it'll be interesting to see whether at the end of Q3, the company actually goes ahead and upgrades the order book guidance as far as FY25 is concerned.
Okay, so watching for a possible upgrade in the order book guidance for KEC International. By the way, Ola Electric continues with its gains. It was a big mover yesterday. They've launched their first gig Electric two-wheelers priced very attractively at 40,000. The stock was on fire. Citi came out with a bullish note. And the stock even today is up close to about 3%. But Swiggy, which has had a good run over the last 3 days, is correcting today. So Swiggy is down nearly about 3%. I think Swiggy went very close to that 500 rupee mark. The high yesterday was 508. So from there, Swiggy has corrected close to about 30 odd bucks. Nagraj Shetty from HDFC Securities is now with us for a quick technical check on the market. Nagraj, the cuts are getting deeper now. Just 10 minutes back, we were saying that how 24,100 is all set to be breached. That's gone. It's 24,050 now on the Nifty, a 200-point fall. Do you think 24,000 as a level could get broken today? And what are you seeing on the charts? Because it's a sudden fall.
Hi, good morning, Rima. The last week's upside bounce has suddenly changed the sentiment of the market. Recently, we have seen some consolidation movement, range-bound action. The gap is still intact of 25th November. I think I'm expecting, despite market is showing weakness, I'm expecting upside recovery from the lower levels. Around 23,900 odd levels, there is a strong support for the market, even though it looks like a downside breakout of the few days range movement. But the trend, near-term trend of the Nifty remains up. I think if Nifty comes down to around the support of 23,900 odd levels, I'm expecting upside bounce from the lower levels, and eventually we could see Nifty breaching the hurdle of around 24,300 odd levels in the near term.
Okay, so the support at 23,900 as per you. Nagraj, what are your individual picks for the day? Any buy or sell calls that you're recommending?
I have two buy calls from the mid-cap segments. We have seen some broader markets are moving significantly from the lower levels, and they have bounced back very well. I'm expecting this broader market indices upside momentum is likely to continue in the near term. On that front, I have two stocks. First one is BEL, Bharat Electronics Limited. It has been moving in a larger consolidation moment. The recent 4-5 days price action is indicating a decisive upside breakout of the downsloping trend line on the weekly chart. Currently trading around 305, 306 levels. One can look to buy at this point of time and wait for the upside target of around 320 to 325 levels, and one can place a stop loss of 290. And next, I have another stock is BDL, Bharat Dynamics Limited. This stock was in a continuous downtrend over the last many months. Lower tops and bottoms were there on the chart. Recently, the recent price action is indicating a formation of important bottom reversal somewhere around 950 levels, and the stock is currently making an attempt to move above the 200-day EMA somewhere around 1120, 1130 levels. Currently placed around 1145. One can look to buy at this point of time. Upside target would be around 1220, and one can place a stop loss around 1120 levels.
Okay, Nagraj, thank you very much for that. By the way, the entire Adani complex is higher today, barring Adani Ports, which is mildly lower. That's down about 1%, in line with the rest of the frontline indices, frontline stocks. Adani Total Gas is up 13%. Adani Green, Adani Energy is locked in an upper circuit of close to about 10%. Power, Wilmar also in the green, and Adani Enterprises too has a positive take going for itself. So despite this market volatility, the market fall, the Adani Group stocks are going strong for the second day in a row. Get into a break. We'll come back and discuss the latest trends from the cement sector. Now, ICRA today has lowered the volume growth forecast for the India cement sector for FY25. More with Ashish Modani.
Welcome back to Trading Hour. Well, as promised, we are shifting focus now to the cement sector. In its latest report, ICRA says growth in cement volumes will moderate to 4 to 5% on a year-on-year basis in FY25 on the basis of slower than expected ramp-up in construction activity. Earlier in June, ICRA had forecast a growth of 7 to 8%. They also add that pickup in infrastructure spending will drive cement volume growth in H2 of FY25, and pressure on realization will dampen operating margins of cement companies by 130 to 180 basis basis points. Ashish Murani, Senior Vice President and Group Head of Corporate Ratings at ICRA, joins us now to discuss more on this. Good afternoon, and thank you so much for joining us now. Ashish, first up, H1, anyway you look at it, was very weak as far as cement was concerned. H2, do you expect a significantly better pickup?
Yeah, hi, good morning. Yeah, we are expecting a very healthy pickup in second half of the current fiscal. So in ICRA's view, the likely improvement in farm cash flows backed by healthy monsoon and a upbeat kharif output and healthy reservoir level are expected to boost the rural consumption in second half of FY25. So that will drive the cement demand for the rural housing segment. And also, if government has to meet this 11.1 lakh crore capital outlay target, then significant ramp up is also required in the infrastructure activity in second half, which will drive growth. So we are pretty upbeat that things will sequentially improve, while quarter one and quarter two were weak because of slower than expected ramp up in the construction activity. But we are building our hope on quarter three and quarter four on both on the infrastructure side and on the rural segment to drive the growth.
So Ashish, H1 volume growth was 2%. For H2, what is your volume estimate?
Around 7 to 8%.
7 to 8%. And therefore, on an aggregate basis for the full year, we should be at 4 to 5%. But
Right.
tell us, in the month of July, when you came out with your forecast of 7 to 8%, what was priced in? Because we know that typically elections do slow down, the construction. I mean, it has a, sort of an impact. Was it just monsoon which caused this sudden shift in your assessment of growth?
No, so basically what we were expecting is the ramp up post-election, because you have model code of conduct in place and there are certain challenges in the overall activity, and it actually slows down. So quarter one was expected to remain weak only, but in quarter two we were expected a very healthy ramp up in the infrastructure activity. So that has not materialized ideally how it should have been. And once all the elections are largely done, we are expecting a very healthy ramp up in the all the markets, especially in the western and the northern market, and things should improve sequentially going after. If you look at the region-wise, in ICRA's view, we are expecting southern market to remain under pressure, but other markets should do relatively better off.
Ashish, one thing that we've discussed is the kind of weakness as far as demand is concerned. That has also led to weakness as far as pricing is concerned. Now, given the fact that there has been significant consolidation as far as the entire industry is concerned, do you expect some sequential improvement in pricing? And what is the kind of pricing trends that you are penciling in as far as H2 as well as FY26 is concerned?
You're right. Actually, a lot of pressure on the margin is largely driven by the pressure on the pricing. What has come as to savior is the overall input cost has also come down. So the overall impact is not that severe how it could have been. But sequentially in the last few months, we are seeing a pricing going up in all the major markets, be it in the western region, in the northern region and eastern region. Southern region remain a lackluster thing. But what we are seeing is around 4 to 7% growth at a blended level overall. We are seeing in the last few months, especially in September and October. So that will sequentially improve. Is it still able to match the last year number? The answer is no. It will still remain year on year lower than the last year number, but sequentially things are improving. And that's what industry participants are also saying, that quarter three will be better than in terms of pricing. And but again, if you look at the overall geography mix, southern market, we are not seeing that kind of pricing increase. So definitely the performance will vary across the region in India.
Okay, so 330 rupees per bag was the approximate pricing in H1, right?
Right.
Have we, give us the number for Q3, Q4 across the various geographies, and have we started seeing price hikes already?
Yeah, we are already seeing the price hikes already, and the price hikes ranges in the range of 7 to 15 rupees. That has already happened. In certain pockets, certain companies have taken a slightly larger price hike. But again, I'm telling you, we are talking about a blended level here. The price hike again varies across region. So the price hike is much better off in the western region, in the northern region, also in the eastern region. But when we talk about the price hike in the southern region, they are largely flattish. So what you are talking about is the largely the blended level. But if you look at the pricing across region, they show a different trend.
Okay, thank you so much, Ashish, for joining us and giving us a sense of cement. At least for FY25, it appears as the demand remains quite subdued. But time now for a short break. We'll get you more on the markets on the other side. And we'll also be joined by the Money Control Pro team to discuss about their new portfolio launch. Stay tuned.
Welcome back. So we've got very special guests in the house. They're actually in-house guests too. Madhuchanda De, Sachin and Bharat from the Money Control Pro team is now joining us on Trading Hours. So there are two sets of news that we wanted to discuss today. One is the launch of the Affluent India portfolio, which is a part of the Money Control Pro portfolio. And secondly, all these portfolios that MC Pro recommends, like the newly minted Affluent India, the Diwali one, the New Year one, they will all be housed under a separate tab in the app called Alpha Folios. So to talk more about these two developments, we have, Madhu, Bharat and Sachin with us in the studio. Thank you very much for joining in. So Madhu, let me start with you, right? Alpha Folios, what exactly is this?
So Alpha Folios is basically a new feature within the MC Pro. So previously also our portfolios were very popular with our subscribers, but the discoverability of the portfolio was difficult beyond the first few days of the launch. Suppose, for instance, we launched the Diwali portfolio towards the third week of October. So the first week, the article would be visible in the app or in the desktop. But beyond that point, it will be very difficult for any subscriber to locate that article. And suppose markets were to tank, say, a week later, they would like to buy the stocks recommended by us, but they would find it very difficult to locate that article. So now all that problem is over. We are giving 365 days, 24/7 access to all our portfolio under this new feature, Alpha Folio, which will house all our portfolios.
Okay, and if you make any changes to your portfolio, in active management, that will also be visible.
Yeah, that will also be visible.
And it comes up as an alert, or
it will come as an alert, and the feature will also have something called a portfolio change tracker. Okay. So if you are a subscriber who has just subscribed, you can still see all the changes that this portfolio has undergone, and you can actually calculate the quantities of the stock in the portfolio on a real-time live prices.
Okay. Example, I mean,
for instance, suppose today the markets opened in the green. Now the markets are in the red, and now you feel that this is the right time for you to buy these stocks in the Affluent India portfolio. You can actually buy the stocks at current prices by using this particular feature.
Okay, so discoverability is one big feature. Active management and tracking of the portfolio is another big USP.
Absolutely, absolutely.
Thank you so much. Sachin, just bringing in, take us through how exactly are you going about constructing these portfolios? What is the kind of money one should, start with? And do you have an equal weightage, or do you have separate weightage depending on, what is it that you like at the time of construction of portfolio?
So the underlying thesis of constructing this portfolio, probably we see a lot of trend that's emerging across different sectors. So if you take the case of mobiles, probably from 2000 to 2010, it was a smartphone penetration era. So everybody was buying feature phones. Then probably we upgraded from the feature phones to the smartphones. And now, like you see a lot of people who own the Apple iPhones now. So there's a premiumization trend that's playing out within the phone industry itself.
Right.
Similarly is the case with automobiles. So the new cars that are coming in, we're coming with a lot of sensors. Maybe you'll see a lot of chrome finishes that are coming across on the grille side, and you see an instrument cluster that's coming in. Earlier it used to be an analog display, and now we have a lot of more things. So and you also have the cars with the 360-degree cameras or a sunroof. So that's a trend that's playing across in the automobile industry. So that's the underlying thesis of getting into this portfolio. So we have created a portfolio across different sectors. So not just restricted to probably a mobile phone or an automobile, but it's a trend that's playing across different sectors. And we have different weightages across. So I think it's a 13 stock portfolio with the cash allocation of around 16% at this point of time. So we'll keep on churning the portfolio, adjusting the weights of these stocks, and depending on how the stock moves, and also keep on adding new stocks to the portfolio.
Bharat, just bringing you in. So number one, how does one subscribe to the service? If you're an MC Pro subscriber, do you get ready access to it? Number two, any criteria that you have in place, any market cap criteria or any volume criteria that you have? And number two, what are the themes that you all are liking currently and that, expect viewers or subscribers, to expect or to start putting in money incrementally?
Yeah, so good morning to the viewers. So basically, there is, for MC Pro subscribers, they have a ready access as Madhu pointed out that you can build the portfolio live, taking the opportunity if the market is weak. Say, for example, currently you can at that point of time, see the live tickers and put the money in the portfolio.
Right.
So that is for the MC Pro subscribers. And the underlying theme is basically we have selected stocks which are, which we think that over the next 10 years will be able to play the premiumization theme. So as we know, the current GDP per capita is about $2,500, so that's really an inflection point for India.
Right.
The number of households that are there, 30% in the average middle income that we say, about 18 to 20 lakhs. That is about 30% now. In the next 10 years, it's going to be like 46, 47%. So we are going to see a very huge shift in the premiumization themes. So we have selected sectors where we think that this premiumization theme will play out, and the stocks will really benefit from that. Be it a hotel-related travel airline, as Sachin pointed out, in automobiles, the premium automobiles that are there, jewelry, for example, there is another an affluent portfolio theme. So these are the stocks, as we said, 13 stocks are there currently, spread across 6 to 7 sectors. And the key feature of this portfolio is that we will, keep on dynamically do the changes. So if, for example, if any theme comes out, if there is any good listing, and we feel that it's a very good premiumization theme, then we may add up in the portfolio. So the cash position is also there. So we'll dynamically manage the portfolio.
So Sachin, tell us, 13 stocks are there. Give us a few examples. And why have you picked them?
Okay, so I'll probably give you an example about an auto ancillary company. Okay. It's called SJS Enterprises. So basically what they're into, they are into the chrome finishes of the cars and everything. So earlier what used to happen, you used to have a car, you used to have a front grille and a back grille which used to be chrome. Now if you see the cars, you'll have probably a handle which is a chrome plated, then there'll be a front and side rails which are chrome plated. So that is one thing which fits in. Apart from that, there are also suppliers to probably Harley Davidson as well as Mahindra and Mahindra. And when you look at the top line of the company was around 370 crores in FY22, and on a trailing 12-month basis, so as of say September 2024, they have reached a top line of around 730 crores. So they have almost doubled the top line in a span of 30 months. So if you translate into CAGR, it's like 30% CAGR, right? And that is a company which is the target size of the market is basically expanding for that business. And so that's the underlying thesis for that overall. And they're getting into newer markets. So now they're working on the optical glass. So earlier they used to have the digital displays within the analog displays within the two-wheelers, right? Now we have the digital displays. Now that needs to be worked across probably at 8 o'clock in the morning and then 12 o'clock in the noon and even in the evening. So the display needs to be visible to the viewers. So that's a kind of differentiated technology that they're working on, and that the product is also very different that they're working on.
In fact, we should pull up this stock, SJS Enterprises, that Sachin is talking about. Let's get that up for you.
Part of the MC Pro portfolio.
It's a part of the MC
while
Pro,
they're just doing that, one question that we want to ask you, how often will you be reviewing the portfolio? When can we expect the changes? Is it done at the end of every quarter, or can it be done real time? And you did say there will be alerts. So, some sense on, when will incremental changes be done?
See, we keep a hawk eye on all the stocks that get into the portfolio. So you can say that it's a 24/7 tracking of the stocks. Even in the middle of the night, if anything happens to the stock, you will get the alert next morning that we have taken some action on the stock. But suppose if if there is nothing so dramatic happening to any of the stocks, then of course there will be a quarterly review. But we are prepared to act, whenever the situation so warrants.
Okay. So the SGS enterprise stock that Sachin was talking about is already up 100% so far this year. So it's been a big mover. So Bharat, tell us, many of these stocks, this affluent India premiumization is not a new trend. Many of the experts who've come on the channel have spoken about it. And stocks across, say, a hotel company like Indian Hotels, I'm not sure if it's a part of your portfolio, but these are now expensive. Jewelry companies, they've gotten re-rated, because it's showing up in the growth rates, growing so much faster than the other consumer discretionary staple companies. So are the valuations not a concern for someone entering in at current levels in the affluent India theme?
Yeah, so first of all, the stocks that we have selected have a very high earnings visibility. And when we say that the theme of affluent India, so essentially it is a shift from the unorganized to the organized sector. If we see the retail sector penetration, so it was 8%, the organized sector penetration was in 2015. It has doubled to...
this is in which sector?
Retail sector.
In the retail sector.
In the retail sector. So a lot of consumer discretionary stocks come in that retail sector basically. So, so the current penetration is about 15%. In 10 years, the penetration has doubled, and this is expected to continue. So we have a very huge market, but the penetration of organized player is like 15%. So if we see there is a huge runway of growth for the premiumization players, and the income level has just reached an inflection point. So more and more people will, consume the branded space. So there is a lot of potential for market share gains for the branded players. So there's a huge runway for growth.
There's a huge runway. So you can overlook the valuations, because this is a longer term story, a 10-year.
And as long as there is a good earnings visibility, the stocks will continue to
do
perform well.
Okay, this has been a great conversation. Madhu, Sachin, Bharat, thank you very much for joining in. So all you, watchers, do get on to Money Control Pro, subscribe to it. And if you're already a subscriber, do check out the new feature on their app, Alpha Folios, and the new portfolio that they've launched, Affluent India. Get into a break. We'll come back and discuss more on the markets. Welcome back. Now, NTT is Japan's leading global technology company. It operates as a mobile operator. Not just that, they provide infrastructure, network, and application consulting services. Now, it's a big company. Its revenues are in excess of $95 billion. They have more than 330 employees, and their annual R&D investments or spends are $3.6 billion. Now, every year, the company holds an annual R&D forum which showcases its innovation and cutting-edge technology for research and business. Now, this year, I got a chance to participate in their annual forum, and I wanted to highlight the company's differentiated take on generative AI. So here's how it works. Instead of having one large LLM is large language model, a large monolithic model, which will require immense training costs and power consumption, NTT's generative AI approach is to have several smaller LLMs, making it more sustainable. They call it Suzumi. Now, the debate is open. Which one is better? Do you want to have one large monolithic model, or do you want to have several smaller ones? I caught up with the CEO and president of NTT Research on the pros and cons. Listen in.
We have released an AI platform called Suzumi. Suzumi is a Japanese word of Japanese traditional musical instrument, like a drum. It's like this. You hit it, and the reason we chose this one is that you just hit it and you get the answer. That you hear the sound of the drum. So it's very instantaneous and so on. But anyway, our approach for this Suzumi is that rather than making a large language model and it requires a lot of hardware, our aim is that relatively smaller language model, while we are maintaining that the performance as much as possible. Personally, I think the best application can be the enterprise AI. Enterprise AI, I think, is already kind of becoming a big trend now. But enterprise is something like this, that everybody uses ChatGPT or Google Geminis and everything, and which is great. But certainly, each enterprise wants to have their own AI to fit into each enterprise's specific process or their business model or whatever, right? So you want to have a AI just custom to the specific enterprise, right? So, and then for that, you don't need to have a large model.
So the approach, simplistically put, is to have many small LLMs, and every enterprise will have many such. Each LLM, a smaller one, solving a particular problem or an application or a requirement of the enterprise.
Right. Yeah.
And how is this better compared to having one large LLM, which a lot of other companies seem to be pursuing?
Right. So I think that certainly there's a lot of debates on that, which is a better approach. But we believe that the smaller approach can be a better approach because it's easier to control.
Okay.
Easier to control. It's kind of similar to today's humans model as well, right? That there's no one who knows everything. Typically, you have the experts. Especially in a company, you have experts of say 10 different people, and then if you're a CEO, you just you know who to ask. If you are facing some challenge, facing some questions, CEOs typically all you need to do is you need to know who to ask. So that AI model, what we are trying to do is a smaller model, which is like experts of the human.
But what's the disadvantage of this model?
I think that the disadvantage might be is that you have to manage so many different things. So there might be some knowledge may fall between the crack.
Okay.
How do you figure out and that type of thing? So yeah, there's definitely pros and cons, and then so our approach is that we try to avoid the situation as much as possible that something fall into somewhere in between.
Well, a very interesting conversation there with you, Rima. I'm sure you had a very good conversation there, and you got to learn quite a bit from NTT as well. Well, just having a look at the markets, there's been a little bit of a rebound. Markets was down close to 1% when we started the show around 45-50 minutes ago. There's been a bit of a rebound, but the Nifty continues to trade below the 24,100 level. But with that, it's a wrap on this edition of Trading Hour. Stay tuned. Halftime Report is up next.